Welcome to Topical Economics. If you are new here, don't forget to subscribe and hit the bell icon so you never miss any of our insightful videos on key economic concepts. In today's video, we're diving into the topic of supply-side policy. I'll be walking you through some past paper multiple-choice questions, carefully analyzing each one to explain why the correct answer is what it is. Whether you're preparing for exams or just want to strengthen your understanding of economics, this video will help you get to grip with important concepts in a clear and practical way. So, let's get started. Starting with the first question. A government introduces a series of economic measures. What is a supply-side policy measure? A. Building more affordable homes to improve labor mobility. B. Controlling consumer spending to reduce inflation. C. Lowering interest rates to encourage purchase of expensive goods. D. Raising pensions to help retired people pay their fuel bills. Reference, 2022 May-June version 2. The correct answer for this question is option A. Building more affordable homes to improve labor mobility. Supply-side policies are designed to increase the productive capacity of the economy by improving the supply of goods and services. This includes measures that focus on increasing the efficiency of the economy, boosting production, and improving the labor market. Building more affordable homes would improve labor mobility by making it easier for people to move to areas with more job opportunities, thus increasing the efficiency of the labor market and the economy as a whole. This is a classic example of a supply-side policy. Analyzing the other options. Option B, controlling consumer spending to reduce inflation, is more of a demand-side measure, as it involves managing demand in the economy. Next, option C, lowering interest rates to encourage purchase of expensive goods, is a monetary policy tool that affects demand, not supply. Lastly, option D, raising pensions to help retired people pay their fuel bills, is a welfare measure, not a supply-side policy. Moving to question 2. A government uses different supply-side policy measures to improve economic performance. Which policy measure would not satisfy one of the government's macroeconomic aims? A. Changing the tax system, which leads to more tax evasion. B. Encouraging foreign investment, which improves the balance of payments. C. Privatizing state industries, which increases economic growth. D. Retraining redundant workers, which lowers unemployment. Reference, 2022 May-June version 1. The correct answer for this question is option A. Changing the tax system, which leads to more tax evasion. One of the government's main macroeconomic aims is to ensure stable and sustainable fiscal policy. A tax system that leads to more tax evasion undermines government revenues, which can negatively affect public services, welfare spending, and infrastructure investment. It also leads to inefficiency in the economy and can worsen income inequality. Therefore, increasing tax evasion would not contribute to macroeconomic objectives like growth, employment, or fiscal stability. Analyzing the other options. Option B, encouraging foreign investment, which improves the balance of payments. Typically strengthens the balance of payments by attracting foreign capital, which can stimulate economic growth, increase productivity, and create jobs. This measure aligns with several macroeconomic aims, such as improving the current account balance, boosting GDP growth, and increasing employment. Therefore, it is a positive policy measure that would help achieve macroeconomic objectives. Next, option C, privatizing state industries, which increases economic growth. Often increases efficiency in industries by introducing market competition and reducing government inefficiencies. This can lead to higher economic growth, improved productivity, and better allocation of resources. A boost in economic growth is a central macroeconomic aim, so privatizing state industries, when done properly, aligns with these objectives. Lastly, option D, retraining redundant workers, which lowers unemployment. Here, retraining workers who have become redundant due to structural changes in the economy helps reduce unemployment and provides workers with new skills to meet market demand. Lowering unemployment is a key macroeconomic objective, and this policy contributes to full employment and a more adaptable, skilled labor force, which are essential for long-term growth and stability. Moving to question 3. Which statement relating to supply-side policies is correct? A. They aim to increase aggregate demand. B. They aim to increase the long-run capacity of the economy. C. They aim to reduce cyclical unemployment. D. They aim to work in the short term. Reference, 2021 October, November, version 3. The correct statement for this question is, option B. They aim to increase the long-run capacity of the economy. Supply-side policies are designed to improve the productive potential of the economy by enhancing factors like labor market flexibility, capital investment, and technological innovation. They focus on increasing the long-term capacity for production and economic growth, rather than directly targeting aggregate demand or addressing short-term fluctuations like cyclical unemployment. Analyzing the other options. Option A. They aim to increase aggregate demand. Is incorrect. Supply-side policies focus on the supply side of the economy, production and productivity, rather than directly influencing demand. Next, option C. They aim to reduce cyclical unemployment. Is incorrect. While supply-side policies can eventually reduce structural unemployment, e.g., through improving skills and labor market efficiency, they do not directly target cyclical unemployment, which is typically addressed by demand-side policies like fiscal and monetary policy. Lastly, option D. They aim to work in the short term. Is incorrect. Supply-side policies usually take time to show results as they focus on structural improvements that benefit the economy in the long run, rather than addressing short-term issues. Moving to question 4. Which change affecting an economy's labor market promotes economic growth? A. Increasing trade union strike action. B. Lowering the age of retirement. C. Reducing training of workers. D. Removing immigration controls. Reference, 2021 October, November, version 3. The correct answer for this question is, option D. Removing immigration controls. Removing immigration controls can promote economic growth by allowing a greater flow of labor into the economy. This can address labor shortages, bring in new skills and talent, and enhance productivity. Immigrants often contribute to the economy not only as workers, but also as consumers, helping to boost demand for goods and services. Additionally, they can help fill gaps in the labor market, especially in industries with high demand for workers. Analyzing the other options. Option A. Increasing trade union strike action typically disrupt production and can reduce productivity. While unions play an important role in advocating for workers' rights, frequent strikes can harm economic growth by creating instability and reducing output. Next, option B. Lowering the age of retirement could reduce the overall size of the workforce, which may lead to a decrease in productive capacity and slower economic growth, as fewer workers will be available to contribute to the economy. Lastly, option C. Reducing training of workers. Reducing training would limit workers' ability to develop new skills, which can hurt productivity and long-term economic growth. A well-trained workforce is crucial for increasing efficiency and innovation in the economy. Moving to question 5. Which supply-side policy measure would help to match the skills of workers to job vacancies? A. Encouraging the modernization of factories. B. Offering retraining to unemployed workers. C. Reducing taxes to provide incentives to work. D. Replacing government enterprises with private enterprises. Reference, 2021 October, November, version 2. The correct answer for this question is option B. Offering retraining to unemployed workers. This policy focuses on addressing skill mismatches in the labor market by providing workers with new skills or improving existing ones, which can make it easier for them to fill job vacancies in different sectors or industries. Retraining programs are particularly useful when there are technological changes, shifts in demand for different types of labor, or regional imbalances in job opportunities. Moving to question 6. Which government policy will increase productivity? A. Decreasing the number of training programs. B. Encouraging labor-intensive production. C. Promoting good industrial relations. D. Reducing private sector investment. Reference, 2021 October, November, version 2. The correct answer for this question is option C, promoting good industrial relations. Is key to increasing productivity because it fosters a positive and collaborative working environment. When employers and employees maintain healthy, open communication and resolve conflicts efficiently, workers tend to be more motivated, engaged, and productive. A good relationship between management and labor reduces disruptions such as strikes, absenteeism, or turnover, which ultimately boosts overall productivity in the workplace. Analyzing the other options. Option A, decreasing the number of training programs. Here, training programs are crucial for developing skills, improving efficiency, and keeping workers up to date with new technologies or methods. Decreasing the number of training programs would hinder the development of workers and reduce their ability to perform at their best, ultimately decreasing productivity in the long run. Next, option B, encouraging labor-intensive production, relies on human labor rather than technology and automation. While it might create jobs in the short term, labor-intensive methods tend to be less efficient compared to capital-intensive methods, those that use machines and technology. This means that, over time, it may lead to lower overall productivity compared to a more technology-driven approach. Lastly, option D, reducing private sector investment. Private sector investment is essential for driving innovation, technological advancement, and infrastructure development. Reducing investment in the private sector would limit access to these productivity-enhancing resources, which could slow economic growth and lower productivity. Moving to question 7. Which statement about supply-side policy is correct? A. It aims to increase the productive potential of the economy. B. It aims to increase total demand in the economy. C. It involves changes in the equilibrium foreign exchange rate. D. It involves changes in the rate of interest. Reference, 2021 October-November, version 1. The correct statement about supply-side policy is option A. It aims to increase the productive potential of the economy. Supply-side policies focus on increasing the economy's ability to produce goods and services by improving factors such as labor productivity, capital investment, technological innovation, and the efficiency of markets. These policies often involve measures like reducing taxes, deregulation, improving education and training, and encouraging entrepreneurship to increase the overall productive capacity of the economy. The other options are more related to demand-side policies or monetary factors. Option B is related to demand-side policies, which aim to boost aggregate demand. Next, option C involves external factors like exchange rate adjustments, not supply-side policies. Lastly, option D involves monetary policy, specifically interest rate changes, which are usually managed by central banks, not directly by supply-side policies. Statement. A. Economic growth, resource allocation, free market equilibrium. B. Government intervention, monetary policy, opportunity cost. C. Public good, market prices, fiscal policy. D. Supply-side policy, negative externalities, factors of production. Reference, 2020 specimen version 1. The correct answer to the statement about supply-side policy is option D. Supply-side policy, negative externalities, factors of production. Supply-side policy refers to government actions designed to increase the productive capacity of the economy by improving the efficiency and productivity of factors of production, such as labor, capital, and entrepreneurship. Common supply-side policies include tax cuts, deregulation, investment in education and training, and improving infrastructure. Next, negative externalities are costs imposed on third parties that are not reflected in market prices. Supply-side policies often aim to address negative externalities, like pollution or congestion, by improving efficiency, reducing market failures, or incentivizing firms to adopt cleaner or more efficient practices. And factors of production refers to the resources used to produce goods and services, namely land, labor, capital, and entrepreneurship. Supply-side policies aim to make these factors more efficient or productive, which is central to improving the economy's output. The other options don't fit as well with the focus on supply-side policy. Option A, economic growth, resource allocation, free market equilibrium, relates to broader economic concepts but doesn't directly capture the essence of supply-side policy. Option B, government intervention, monetary policy, opportunity cost, is more focused on macroeconomic policy, particularly demand-side measures and decision-making. Lastly, option C, public good, market prices, fiscal policy, relates to different economic issues, especially public goods and fiscal policy, which aren't the primary focus of supply-side policies. Moving to question 9. Which government policy measure would cause an increase in a country's supply of labor? A. Increasing unemployment benefits. B. Lowering interest rates. C. Raising income tax. D. Raising the age of retirement. Reference, 2020 October, November version 3. The correct answer for this question is, option D. Raising the age of retirement policy measure would directly increase the supply of labor by encouraging people to remain in the workforce for a longer period of time. As the retirement age is raised, individuals who would have otherwise retired earlier are incentivized or required to continue working, thereby increasing the overall supply of labor. Analyzing the other options. Option A. Increasing unemployment benefits. While increasing unemployment benefits may provide more financial support for those out of work, it typically does not increase the supply of labor. In fact, it could reduce the incentive for unemployed individuals to actively search for jobs, which might have the opposite effect on labor supply. Next, option B. Lowering interest rates, is a monetary policy tool that primarily affects demand for investment and consumer spending. While it can stimulate economic activity, it does not directly affect the supply of labor. Lastly, option C. Raising income tax. Increasing income taxes would likely discourage work, as individuals may feel less motivated to work if a larger portion of their income is taxed. This could reduce the supply of labor, especially for higher income individuals, as it may reduce the financial reward for working. Moving to question 10. What is the main aim of supply-side policy? A. Increasing economic growth by raising productivity. B. Increasing the balance of payments surplus by restricting free trade. C. Reducing the government's budget deficit by increasing taxation. D. Reducing the money supply by increasing the rate of interest. Reference, 2020 May-June version 3. The correct answer for this question is, option A. Increasing economic growth by raising productivity. The main aim of supply-side policies is to increase the economy's productive capacity by improving the efficiency and productivity of factors of production, such as labor, capital, and technology. By doing so, supply-side policies aim to foster long-term economic growth, enhance competitiveness, and reduce structural unemployment. Analyzing the other options. Option B. Increasing the balance of payments surplus by restricting free trade, refers to policies aimed at improving the trade balance, which is typically associated with protectionist or demand-side measures, not supply-side policies. Supply-side policies generally do not focus on restricting free trade, but on improving productivity and efficiency in the economy. Next, option C, reducing the government's budget deficit by increasing taxation, describes a fiscal policy measure aimed at increasing government revenue, but it is not a supply-side policy. Supply-side policies focus on enhancing the economy's supply, output potential, not just boosting government revenue through higher taxes. Lastly, option D, reducing the money supply by increasing the rate of interest, describes a monetary policy measure, typically used to control inflation, rather than a supply-side policy. Supply-side policies aim to improve economic growth and productivity, while monetary policy focuses on controlling inflation and managing interest rates. Moving to question 11. Why does more emphasis on education and training lead to an increase in national output? A. It improves the productivity of the labor force. B. It lowers the inputs of capital investment. C. It reduces demands for higher pay. D. It reduces the power of trade unions. Reference, 2020 February-March version 2. The correct answer for this question is, option A. It improves the productivity of the labor force. When more emphasis is placed on education and training, the workforce becomes more skilled, knowledgeable, and efficient. This leads to higher productivity, as workers are able to perform tasks more effectively, innovate, and solve problems more efficiently. As productivity increases, the overall output of the economy rises, which is a key driver of economic growth. The other options are less directly related to the link between education/training and national output. Option B, education and training typically do not lower the inputs of capital investment. Instead, they often complement capital investment, enhancing the returns on capital by increasing the skill of the labor force. Next, option C, while education and training can affect wages, the focus here is on productivity and output, not directly on wage negotiations. Lastly, option D, the relationship between education/training and the power of trade unions is indirect, and this option is not directly tied to the productivity link that leads to increased output. Moving to question 12. How would government spending on education be classified? Reference, 2019 October-November. The correct answer for this question is option C. Government spending on education is primarily supply-side, since it focuses on improving the long-term potential of the workforce. The fiscal aspect comes in when considering how the government funds this expenditure. Moving to question 13. The government increases taxation in order to fund an increase in spending on government training schemes. Which policy combination would this involve? A. Fiscal policy and monetary policy only. B. Fiscal policy and supply-side policy only. C. Monetary policy and supply-side policy only. D. Monetary policy, supply-side policy, and fiscal policy. Reference, 2019 May-June version 2. The correct answer is option B. Fiscal policy and supply-side policy only. Fiscal policy involves changes in government spending and taxation. In this case, the government is increasing taxation in order to fund an increase in spending on government training schemes. This clearly falls under fiscal policy because it involves government expenditure and taxation decisions. On the other hand, supply-side policy refers to policies that aim to improve the productive capacity of the economy, often through initiatives like education, training, and workforce development, which improve labor productivity and efficiency. Government-funded training schemes are a classic example of a supply-side policy, as they aim to improve the skills of the workforce, boosting long-term productivity. So, increasing taxes to fund training schemes combines fiscal policy, changing taxes and government spending, and supply-side policy, improving the workforce's productivity through training. Analyzing the other options. Option A, fiscal policy and monetary policy only. Monetary policy refers to actions taken by a central bank, such as changing interest rates or controlling money supply, to influence the economy. There's no mention of monetary policy in the scenario, so this is not the right combination. Next, option C, monetary policy and supply-side policy only. Again, monetary policy isn't part of this scenario. The government is not altering interest rates or money supply, it's adjusting taxation and spending, which are fiscal policy actions. Lastly, option D, monetary policy, supply-side policy, and fiscal policy. While supply-side and fiscal policies are involved, there's no indication that monetary policy, interest rates or money supply management, is being used in this case. Moving to question 14. Which is a supply-side policy? A. Increasing interest rates. B. Increasing taxation. C. Providing training courses. D. Selling government bonds. Reference, 2018 May-June version 2. The correct answer for this question is option C, providing training courses. Supply-side policies aim to increase the productive capacity of the economy by improving factors like labor productivity, technological innovation, and efficiency. Providing training courses is a classic supply-side policy because it enhances the skills of the workforce, improving labor productivity and thus contributing to higher output in the economy. Analyzing the other options. Option A, increasing interest rates, is a tool of monetary policy, not supply-side policy. It is used by central banks to control inflation or manage economic growth by influencing borrowing and spending, but it does not directly improve the productive capacity of the economy. Next, option B, increasing taxation, is part of fiscal policy, not supply-side policy. While it can influence overall demand and government revenue, increasing taxes does not directly improve the economy's productive capacity or efficiency. Lastly, option D, selling government bonds, is also related to fiscal policy and involves the government raising funds through debt issuance. It's not a supply-side policy because it doesn't directly affect the economy's supply-side factors, like labor productivity or resource allocation. Moving to question 15. Which pair of government actions combines a fiscal policy with a supply-side policy? A. Changing government spending with changing interest rates. B. Cutting tax rates with providing information on job vacancies. C. Limiting bank lending with the privatization of industry. D. Restricting credit with less control over labor markets. Reference, 2018 February-March version 2. The correct answer for this question is option B, cutting tax rates with providing information on job vacancies. Fiscal policy involves changes in government spending and taxation. Cutting tax rates is a fiscal policy action because it involves altering taxation to influence economic behavior. On the other hand, supply-side policy aims to improve the productive capacity of the economy, usually by enhancing labor markets, boosting productivity, and encouraging investment. Providing information on job vacancies is a supply-side policy because it improves the efficiency of the labor market by helping workers find employment more easily, which can improve overall productivity. Thus, cutting tax rates, fiscal policy, and providing information on job vacancies, supply-side policy, is the pair of actions that combines fiscal policy with a supply-side policy. Analyzing the other options. Option A, changing government spending is fiscal policy, but changing interest rates is a tool of monetary policy, not supply-side policy. So, this option does not combine fiscal and supply-side policies. Next, option C, limiting bank lending is typically a monetary policy tool, used to control credit and inflation, and privatization of industry is a supply-side measure. However, limiting bank lending doesn't combine with fiscal policy, so this is not the right answer. Lastly, option D, restricting credit is a monetary policy action, and less control over labor markets can be seen as a supply-side measure, e.g., deregulation. But since restricting credit is not part of fiscal policy, this doesn't combine fiscal policy with supply-side policy either. Moving to question 16. A government intends to improve skills by offering free training to school leavers at age 16 until they reach 18 years. It proposes to pay for this by taxing the profits of firms. Which policies do these proposals involve? Reference, 2017 May-June version 1. The correct answer for this question is option C. Provision of skills training refers to offering free training to school leavers. It is part of a supply-side policy because it focuses on improving the skills of the workforce, thereby increasing potential productivity and economic growth. Payment for skills training. The government intends to fund the training by taxing the profits of firms. This is a fiscal policy because it involves taxation, a government revenue tool, to finance public expenditure. Moving to question 17. Why can government spending be described both as a fiscal policy and a supply-side policy? A. It has a nationwide effect and can control firms' production possibility curves. B. It is announced in the budget and can increase the economy's ability to produce. C. It is determined by the central bank and can raise the cost of production of firms. D. It must equal tax revenue and can regulate the amount of the money supply. Reference, 2017 May-June version 3. The correct answer for this question is option B. It is announced in the budget and can increase the economy's ability to produce. Fiscal policy. Government spending is a key component of fiscal policy, which involves changes in government spending and taxation to influence the overall economy. When the government spends money on infrastructure, education, healthcare, etc., it directly stimulates demand, potentially boosting economic activity and reducing unemployment. This aligns with fiscal policy. For supply-side policy, government spending can also be part of supply-side policy if it is targeted at increasing the economy's productive capacity. For example, spending on infrastructure or education can enhance productivity, improve the efficiency of firms, and create a more skilled workforce, which boosts the long-term supply potential of the economy. Thus, government spending is a tool used in both fiscal and supply-side policies because it can both stimulate demand in the short term, fiscal, and improve the economy's ability to produce in the long term, supply side. Moving to question 18. A government decides to increase the rate of income tax and spend the extra revenue on providing training colleges. How might this be described? A. As fiscal and monetary policy. B. As fiscal and supply-side policy. C. As fiscal, monetary, and supply-side policy. D. As monetary and supply-side policy. Reference, 2016 October, November version 3. The correct answer for this question is option B, as fiscal and supply-side policy. Fiscal policy, the government is increasing the rate of income tax and using the extra revenue for public spending. This is an example of fiscal policy, as fiscal policy involves government decisions on taxation and public spending. On the other hand, supply-side policy, spending the extra revenue on training colleges is a supply-side measure because it aims to improve the economy's productive capacity. By investing in education and training, the government is potentially enhancing the skills of the workforce, which can lead to increased productivity and long-term economic growth. Analyzing the other options. Option A, as fiscal and monetary policy. Monetary policy involves controlling the money supply and interest rates, typically managed by the central bank. Since this policy focuses on taxation and government spending, it is not related to monetary policy. Next, option C, as fiscal, monetary, and supply-side policy. As mentioned, monetary policy isn't involved here, so this is incorrect. Lastly, option D, as monetary and supply-side policy. There is no mention of monetary policy, interest rates, or money supply control, so this answer is incorrect. Moving to question 19. When a government aims to encourage economic growth, it may adopt supply-side policies. Which policy is a supply-side policy? A. Increasing the money supply. B. Lowering interest rates. C. Reducing direct taxation. D. Retraining unemployed workers. Reference, 2016 May-June version 3. The correct answer for this question is option D. Supply-side policies are generally focused on improving the economy's productive capacity by making it easier for businesses to produce and for individuals to work. These policies typically include reducing taxes, deregulation, improving education and training, and incentivizing investment. Moving to question 20. A government introduces a law to reduce the restrictive practices of trade unions. What would be the most likely purpose of this law? A. To change from a mixed to a planned economy. B. To ensure a fairer distribution of earnings. C. To increase competition in labor markets. D. To reduce government expenditure on job training. Reference, 2016 May-June version 2. The correct answer for this question is option C, to increase competition in labor markets. When a government introduces a law to reduce the restrictive practices of trade unions, the main aim is often to make labor markets more flexible and competitive. Thank you for watching this video. I hope the explanations of past paper questions and the reasoning behind the correct answers helped clarify some key concepts. If you found this video useful, please don't forget to like, comment, and subscribe to Topical Economics for more insightful lessons and exam tips. Your support is truly appreciated, and it encourages me to keep creating valuable content to help you succeed. Feel free to leave any questions in the comments, and I'll be happy to assist. Thanks again for being a part of the Topical Economics community.